Hi, I'm Zhou from AIA Singapore's Investment Department. I'm here today to share with you more about AIA's Platinum Index Legacy product. We first looked into the potential of index-linked products in 2022, when the economic environment was starting to look favorable for such products. In February 2024, we are proud to be the first across AIA Group to launch Platinum Index Legacy. Since then, our competitors have also launched different variants. We continue to refine our product proposition and has since relaunched Platinum Index Legacy in July 2025. Since inception, the index-linked returns have been very encouraging. This is testament to our focus on doing right by our policyholders by choosing the appropriate index and structure that provides the optimal mix of return and cost. Nevertheless, we are always monitoring existing investment performances and exploring new solutions available in the market to ensure that AIA's proposition remains robust. There are two accounts in the Platinum Index Legacy product, and the policyholder will have the option to allocate between the fixed account and the index account. The fixed account is similar to traditional UL products that provide non-participating crediting rates with a minimum guaranteed crediting rate of 2%. What makes Platinum Index Legacy different from traditional UL products is the index account. This index account provides return to the policyholder that is linked to the performance of S&P 500. While the illustration rate of the index account might seem only marginally higher than the fixed account, over a period of 35 years, we are in fact looking at a difference of almost double in account value between the index account and fixed account. Do note that the figures are accurate as at September 2025. For up-to-date numbers, please reach out to your AIA financial representatives. Primary allocation of the fixed account and index account will be into fixed income assets. Here at AIA, we have more than 100 years of experience managing fixed income assets, and this asset class is our core expertise. We regularly engage with our portfolio manager to ensure the portfolio maintains broad diversification and focus on high-quality investment-grade bonds. The fixed income returns from the index account will be channeled to fund exposure to the S&P 500. Our size and scale at AIA allows us to obtain these purchases at a competitive price. Assuming a crediting rate of 9%, we will now illustrate how the returns for the index account is accumulated in three different scenarios. In the first scenario, S&P 500 experienced negative returns, but with a floor of 0%, the policyholder will simply receive a crediting rate of 0%. In the second scenario, S&P 500 returned at 8%, which is between the floor of 0% and the cap of 9%. The actual market return of 8% will be credited to the policyholder's index account. In the final scenario, where S&P returned 12%, the cap rate of 12% will be credited to the policyholder's index account. Equity markets can be very volatile. For example, in 2008 and 2022, S&P 500 experienced a negative return of more than 35% and 18% respectively. To recover back to its original level, a drop of 35% will require a return of more than 50%. This is why the floor of 0% is crucial, as it provides you the protection you need during these volatile periods. Nevertheless, equity has historically outperformed fixed income over the long term, and this is the primary appeal of Platinum Index Legacy over traditional universal life products. Many of you might ask why S&P 500 is our index of choice. Firstly, it remains the most liquid and cost-effective index to trade. Secondly, S&P 500 has outperformed many other major indices such as Straits Times Index and Hang Seng Index over the last 1 to 2 decades. Although S&P 500 consists of US-based companies, many of them are in fact global companies that derive more than 40% of their revenue outside of the US. Furthermore, as US remains the top destination for growth and technology companies to list, S&P 500 allows us to invest in new, exciting companies. The cap rate has been carefully calibrated to ensure that the downside protection and upside potential are optimal to policyholders. Staying invested with AIA through Platinum Index Legacy will allow policyholders to compound wealth for your future generations. If you're interested to find out more, please reach out to your AIA financial representative.